What is going on, crypto peeps? Welcome to the Traveling Crypto. So an exciting week last week leading up to the weekend. We had a successful mainnet launch of two top 10 cryptos, TRX and EOS. Let us get right into it. Looking at the market currently, we've seen a little bit of a dip today. Market cap is at 337 bill. That is a drop off of about 20 billion from this weekend's prices. Looking at BTC prices, you'll see that there really isn't that much excitement or movement today. It's kind of just a stagnant day so far. An expected consolidation after a nice little rally this weekend fueled by EOS's launch, as well as a few other cryptos that saw some positive sentiment, IOTA, Cardano, etc. But over the last 24 hours, really, there hasn't been much excitement. It just seems like a regular day in the market, which, I mean, we are entitled to, right? I mean, you see that in traditional markets as well. So let us get right into it. So looking at BTC, this is the 1 week chart giving us a little bit of a higher level view as to what's going on. If you've been following me the last few weeks, you'll see that I was saying that this looks like a forming reverse head and shoulders pattern, with this being the right shoulder, and that we actually need prices to move up in order for this right shoulder to complete. It looks like we are on that path. There is major resistance, obviously, around 6,800 on the weekly chart, which resulted from the weeks toward the last week of March and the first week of April. You'll see these two arrows here, and this was just in relation to the inverse head and shoulders and this neckline, which we can use as a resistance line, saying that if we break above that, we could see a rally. If we get to the neckline and see a rejection, then we could obviously decline. I mean, that's not rocket science here. Let's take a more granular view. Looking at the 1 day chart, you'll see that this Fibonacci retracement is based on this recent swing high that we saw in the beginning of May at around 9,800, and the low is the start of this rally. Really, we've been on, theoretically, I mean, not theoretically, matter of factly, we've been on an uptrend since the beginning of April, even though that uptrend has now, you know, we're almost parallel, or we almost hit parallel to where this uptrend started, but technically we are still on an uptrend. We would not be on an uptrend if we broke this support line right here. One positive note is you do see this divergence between the price and the RSI, as well as the price and the stochastic, almost the same slant or the same angle of divergence. Now, this is what is called a hidden bullish divergence. And what a hidden bullish divergence tells you, or hidden divergence tells you, versus a regular divergence, is a hidden divergence tells you that trends are likely to continue, whereas a regular divergence tells you that a possible reversal is on the way, whether that is to an uptrend or downtrend. It depends on the direction you're moving. So in this case, like I said, we've been on an uptrend, so a hidden bullish divergence where the price makes a higher low and the oscillators make a lower low, that tells you that this uptrend is likely to continue. Obviously, the one important contingent here being the volume. And as we've discussed before many times, this volume doesn't really support any kind of heavy rallies momentarily, right? So at this point, it looks like we are just continuing to trade in this really limbo zone between 7,200 and 7,500. And if you follow me on the Discord, I was being asked a question of whether it is a good time to buy BTC in order to swing trade for higher prices. And I was saying that this trading zone between 72 and 75 doesn't really give us any indication of anything. To me, it doesn't tell us whether we're on a rally or whether we're going to see a decline. And you know, a lot of that is also based on the level of volume, not only the buy volume, but even the sell volume, right? You see this red candlestick that we're forming today is not accompanied by a ton of selling volume either. So that, to me, tells us that we are, you know, trading in this kind of limbo sideways pattern between 7,200 and 7,500. One thing that's interesting is you'll see this mini pattern right here over the last, you know, week and a half or so. This is forming an ascending wedge, and an ascending wedge is actually a bearish pattern, right? So if we take out today's candle actually and just draw the, you know, everything before today's candle, you'll see the wedge a little more clearly. And then if you accompany that with if you look at this indicator right here, this is the short contract. You'll see that the short contracts are actually rising a bit, right? Meaning that the market sentiment is decreasing for Bitcoin. And what we've seen in the past, I've done a video on this. If I can find it, I'll link it in the annotation above. But, as this tends to rise, it can give you a little bit of a forecast about future short-term movement. So if you're going off of this, the fact that we don't have a lot of volume and this ascending wedge pattern, you could have guessed that either, we would see a red candle in the coming days, or that we would be trading sideways, but that a rally upwards was not imminent, right? It wasn't in the cards for us based on these indicators. That's why we want to take a confluence of indicators and not just say, oh, look, the MACD is starting to converge and the 12 is above the 26, means this is a good buy time. No, you have to take a confluence of indicators into account, right? You have this pattern, the low volume, the increase in shorts, etc. So all of these indicators at least point to bearish momentum or stagnating momentum, and not really a rally. The one thing that I've pointed out that I said we should watch out for, and unfortunately looks closer than ever, is this right here. And this is the convergence of the 100-day EMA and the 200-day EMA, where the 100-day risks falling below this. Now, again, if you saw a video that I did on this previously, this hasn't happened since 2014. And when it did happen, it lasted over a year, almost a year and a half. The circumstances might have been a bit different because the precipitating event at that point was the Mt. Gox debacle, right? Which we don't have an equivalent for, thank God, in 2018 yet. Hopefully we don't, but that was the event that spurred that decline or that bear market in 2014. So either way, this hasn't happened. The green, the 100, hasn't fallen below the 200 since 2014. So hopefully we get volume to push this thing back up. A lot of people are talking about June 6th because the 6th of the month is, you might have heard the 6th day theory, where the 6th of the month is a day in which massive activity happens. We'll see. Either way, we need volume to pump these prices up in order for the moving averages to normalize again. Moving on to Ethereum. If you look at Ethereum, I was also on the Discord. I was saying, and by the way, if you want access to the trade alerts, subscribe to the Patreon. The trade alerts are issued on the Discord community itself. So there's a separate channel for the trade alerts. On Ethereum, I was saying that I was monitoring this closely because Ethereum looks like it's in a current spot for a possible opening position on Ethereum. If you don't hold any Ethereum, or if you're looking to swing trade Ethereum, we see this pennant forming, right? And depending on what happens with the price action, that will partly determine the future of Ethereum's short-term pricing, right? Obviously, again, we need volume as well as other indicators, but Ethereum looked like a juicy play at the moment because Ethereum has a trend of, when it gets to the oversold mark at the 30 on the RSI, it then gets to the overbought spot on the RSI, meaning that there's a momentum or a rally that takes the price action as well as the RSI up to the overbought level before it hits the oversold level again. So looking at that, as well as where it's at on the fib, it is right between the 0.382 and 0.5, which is one of the classic buy levels, as well as this pennant forming, and the fact that it was flirting with breaking above the pennant resistance obviously didn't happen. That's why it's so important to wait for market confirmation, right? If you nullify or ignore this red candle here, you would have looked at Ethereum and said, oh, wow, that's 4 green candles in a row. Momentum looks great. It looks like it's going it looks like it will cross or break above the resistance line, but it hasn't happened. So what I was doing was waiting for confirmation for that to happen, which would put us right around the $630 mark. And it hasn't happened. We hit that wall and came back down. I didn't make a play on Ethereum. So now I'm waiting for market confirmation. We'll see how we break out of this pennant and look at the accompanying volume as well to determine whether Ethereum is a juicy play. Let us move on to TRX. here is Tron. Now, Tron is interesting, obviously, because we launched the mainnet. Now going back, it was the 31st or 30th, depending on the time zone that you live in. So what we saw was, the price, this heavy rally, this price action in anticipation of that mainnet release. And then there's kind of this consolidation period followed by what is now a downtrend. And it seems like the market sentiment is no longer excited on Tron. They moved on to EOS, which was a couple days later. And this is probably part of the reason why Justin Sun had moved up the deployment date of the mainnet to May 31st, is because he might have suspected that Tron would be overshadowed by EOS, and it really was. So he wanted to launch a few days before. However, Tron launched, but they do have a long roadmap ahead, right? So you'll see on the Tron roadmap, the Odyssey 2.0 launch, which is what happened on the 31st, is just one of the few things on the roadmap. They still, are trying to get to 10,000 transactions per second. They are currently at around 2,000 TPS per their claims. They are attempting to reduce their fees to zero. They want to debut decentralized applications on their platform. And obviously the long-term goal is to have a decentralized internet. If you guys are fans of Silicon Valley, then you'll know that this topic is a hot topic right now. And they have yet to launch a token wallet. They do have a wallet that you can download, but watch what happens if you try to download the wallet. It's clearly not production ready. Please apply for testing TRX. Do not deposit the TRX to the wallet, otherwise the TRX may be lost. So this is currently just for testers, but they are looking to launch a production-ready wallet eventually later this year. So my point being that the TRX mainnet was just a first step in a really long roadmap. And although EOS, you could say that EOS is kind of in the same spot, I think the market perception, especially among crypto enthusiasts, is that EOS is a lot further along with the ability to launch successful DApps on EOS and whatnot. So why don't we take a look at EOS to round out our analysis? So if you look at EOS is fared a lot better than Tron has through the mainnet. We actually, this tall green candle was this was the date that the mainnet launched, and we saw a healthy rally. Now we do see a pullback. The interesting thing about EOS is because they are now in the process of launching their own token off of the Ethereum network. A lot of people who have deposited their EOS into registered wallets, cannot move them now because the tokens are frozen until EOS launches its own token, in the process of launching its own token, right? So a lot of the EOS token holders are locked out from trading their EOS. And why would you want to, during this process? I mean, one of the reasons that people have registered their EOS is because of the promising airdrops in the future, right? And airdrops are basically just free money at this point. And so I'm not really too concerned because, any loss you suffered here by holding your EOS in a wallet that has now frozen your EOS until this process has concluded, you will redeem that value and possibly more in future airdrops because of the process that you are currently undertaking to register your tokens, right? So it really will offset any potential losses that you see here from the slight decline or the slight pullback. And plus, I think that after after this process completes, after the mainnet launch completes, and you can now trade actual EOS tokens freely, I do believe that we will see a lot more activity here that will push the price up further. Like, we will see another rally sometime in the near future. So I'm not too concerned with the short-term, outlook on EOS's price. If we do look at this right here, you do see a hidden bullish divergence. Once again, this one being a lot more dramatic than the one that we saw on BTC. You see that the price made a higher low. The RSI made a much lower low. That is a great sign that this uptrend that we're currently on, and we are still in an uptrend in spite of this little consolidation that we've seen here. We are still in an uptrend. So this is a great sign that the uptrend will continue. We do see a ton of green healthy volume in EOS's recent history, and the days that we do have red candles, you know, you don't see a dramatic number of sell-offs to counteract the green volume. So we are in a good place with EOS long term. I think look out for I'm going to be doing an EOS versus Ethereum video soon, describing what are the differences with each and what are the advantages that each has over the other. That is it for this video. Do me a favor, hit that thumbs up, smash the likes if you got anything out of this video. If you have any questions, start a conversation in the comment section or join the Discord that is 100% free. Sign up to the Patreon for the weekly top crypto picks and the daily trade alerts. Subscribe to the channel, hit that notification bell. Stay safe out there. Peace.